As the market tries to climb higher, we cast our attention to what could be the mother of all gold rallies. Gary Glover goes through the market indices. He also looks at the trading shares of this week and his research behind it all. Good morning, Gary. How are you?
Yeah, I'm good. Chris, how you going?
Well, I'm pretty excited for this week's report. Sounds pretty promising. And for the listeners who haven't been listening for the last couple of weeks and months, you've been discussing gold for many months now, and you flagged it as part of sort of the inflation blueprint that you looked at when inflation started rearing its head again. And this is the only part that's yet to unfold. So you've been looking at the launch pad, the momentum shares that lead the ASX, your own trading portfolio, like on these Tuesday videos. And you've been looking and monitoring rally before it kicked into gear, and now it has. But this week you've put in there that it could be the start of the mother of all gold rallies. So I'm interested to hear sort of, has anything changed, or it's just sort of more following into that blueprint?
No, I mean, look, really is last man standing there, gold. Because if you look at all the high inflation periods of the past, you've had these big moves in energy, big moves in precious metals, and you're seeing growth, small caps, be very unpopular, be the weakest sort of sector. Your value shares be sort of be solid segment there, where you're sort of basically people are chasing a bit more yield and the high yielding sort of stocks, which has definitely been the case here. So everything that we've seen in the past, the high inflation periods of the past, have all unfolded here in the last sort of 12 to 18 months. The only thing missing is a really is a big move in gold and gold stocks here. So we haven't seen that. So obviously the US dollars had maybe something to do with that, but yeah, we've had a couple of moves in the gold stocks there, but nothing big, nothing not like sort of energy that we're seeing here, and we did see those gold stocks hop into the launch pad there a couple of weeks ago, Chris, as well, and we saw some stocks there actually. It was weird actually, because before gold pulled back, stocks like Ramelius, I think, WGX, they were going to new highs, so they're already breaking out and solid there. So we had a real mix in the sector there. Had sort of some stocks breaking new highs, and then when we had the market sort of cool off as well, some of those stocks pulled back and went back and retested new lows. Actually did wash out while gold pulled back. But a lot of the stocks actually sort of held tight. Did some pretty, so the stocks were actually showing some relative strength versus the index, which is obviously good. That's the sort of stocks you want to follow. And that's been, I think WGX has gone to a new high here. Ramelius has gone to a new high here. I think RSG's held nice and tight, had a little bit of a pop here as well. So starting to see some sort of strength in that sector there. But, we saw widespread, how many golds were in the top 30 there last week, Chris? It must have been 8 or 9, maybe at least.
Yeah, we were close to, it wasn't quite 10, I don't think, but it was close to it, which is one segment of the market.
Yeah, so last time we saw that was probably, the uranium was stocks there maybe 2 or 3 months ago. Prior to that, we might have saw it with some lithium stocks maybe 3 months prior to that. So just when you see that sort of one sector get widespread sort of strength there, and we talked about sort of, I know like some of Minervini's rules about, when you go through, when the market has a pullback, you have a correction in the market, you're looking for the stocks that hold up the best, looking for the stocks that are sort of going maybe sideways, within 25% of the high, that are giving this sort of sideways sort of base building characteristics. And then when the market does turn up off the low, they're the stocks that have the biggest spring move off the lows here. So that's definitely been the gold sector here so far. So looks pretty interesting for gold there. It's just one of those things where you're sort of waiting for this big move in gold. Hasn't sort of come here, but that little washout there in the last couple of weeks there, that might be the, kind of, stop, knock everyone out sort of at the, a little bit hanging on here, and then it turns sharply. And what we've seen here is off that low, it's been really sharp move there. Obviously, what's happening overseas has aided that, but there's often sort of a catalyst for the start of the move there, but then they can go on here. So I think gold's pretty interesting here. I think it's a sector that definitely been sort of trying to build a bit more position there. Got a couple of positions at the moment doing pretty well. but yeah, what one I'd look at there. The most interesting thing about gold too, Chris, is people believe that gold is a hedge over the market, and if someone can actually explain that to me, or even better, show me some charts in the past that actually prove that case. I'd love them to show me, because from all the work that I've done is that typically I find that gold actually sort of closely aligns to the market. It doesn't actually act differently. It actually tends to find a low at the same time the market finds a low. So I'm actually encouraged that gold's looking pretty bullish here off the low here, because that normally coincides with market lows as well. And so we're looking for like so easily looking for an October low for the market to rally, kind of where we go. So in the past, I always find gold looks good at the same time as the rest of the market looks good, or the majority sort of equities look good. So that's why I don't often always sort of trade it here, but just thought this was the one that was sort of showing up some relative strength as well, really holding up in the face of some aggressive selling there across the index. And they were the stocks to jump out there. So I've done everything right so far, Chris. So that's why I think you've got to have some in the portfolio personally.
Well, you've definitely got some in the portfolio at the moment. That's on the screen here. We can see that the kid highlighter on. Had the gold already. And we'll work through this week's report, actually, because there are some good charts in here. Just brush up on the indices. We've talked about it before in the last couple of weeks, sort of coming off support. We had a little bit of a rally intra-week, but didn't manage to hold it for some of the international indices. Does that negate anything, or does it change it? Or it's just sort of, okay, it's a bit of from a body range, it's an inside day, or is it a reversal to take? How do you read it?
Yeah, look, it's positive that we've sort of had this little ABC, three-wave correction there, sat on top of a bit of a support zone there. Have had a bounce here, but really haven't sort of followed through so far. So, ideally we'd like to see something a bit more impulsive, so a bit stronger here. So, so it is positive there, but we're definitely not out of the woods yet. It's still sort of, just because we've underperformed this market versus other cycles there, just probably a little bit cautious here. But still optimistic that we'll sort of see a bit of a rally into year end, but because we haven't seen the typical sort of third year or mid-term year really strong move, maybe this is going to be a bit of a grind higher here. So, so we'll still positive there, but probably I'd like to see a little bit more, Chris. I'd love to see this sort of take out last week's high. If I see all the indices, I think the Dow's taken out the high last night, but the S&P and the NASDAQ haven't taken out their last week's high. So I think if all three indices can sort of break to new highs here, that'll be a good sign there. That'll have me a little bit more confident that we're going to run up at least into sort of maybe nods, mid nods, hopefully into the end of the year.
So we also just look at the Aussie market, which is still sitting below that overhead resistance, but it has managed to hold off these lows, this support level that you've indicated had previously. Same sort of thing. You just want to see a bit more gusto coming out of the lows would be ideal. Yeah,
it's just typical big sideways orientated range, isn't it, really? So, so have gone below the sort of like a little, there is like an ABC in there. There is sort of come back to, go slightly below that previous low, which is sort of typical of a lot of stocks making those sort of false breaks here. So, just see this as more of a larger sort of sideways orientation here. So, it's funny here. We're sort of, as we speak here, I'm just looking at that chart going, well, that's, if you think about the middle of 2022, which is probably that August, September high. You think about that point there, that one there, yep. Of that one there, yeah. So from that point there, Chris, that chart has, it's almost like the fallback. You remember talking about the fallback technique? If we look at that point there, the market is basically how it traded into that point it's traded out. It's almost exactly traded the same way sort of out of it there. So, you know, came back, had a rest of the low, had a bit of a bounce, pulled back, went to test the high, pulled back in the range again, come back out again, pulled back, go back up and test the high again, pulled back again. So at some point they tend to move away, but the fallback technique is interesting there. Just sort of something I read in the book there once and thought the guy was a bit crazy then. Then after I read it, I just kept seeing it, unfolding in front of my eyes all the time here. So it's, you know, it's a bit like head and shoulders pattern is obviously a symmetrical pattern, double tops are symmetrical. They're probably some of the worst ones, but we do see oftentimes, you know, how a stock or indice might trade into a low or a high and stuff there. They can sort of mirror themselves out of that point. So, yeah, it's just interesting, that's all. But yeah, I still think this is going to be just, you know, choppy sort of sideways orientation here. But hopefully we get the sort of seasonal rally sort of, you know, October up into, you know, December, hopefully sort of early January sort of high there.
That's what we'll look for. But the gold, we'll come back to that because you've got the chart here. You've already talked about it at the start, so you've covered a lot of ground there. What does the chart say? So we've talked about sort of the history of the cycles. You've talked about inflation. You've talked about how and why gold. Is there anything particular on the chart that's caught your eye, or is it that it's notably different to a fair few of the gold companies that you've already been trading?
Yeah, I mean, look, it's had an impulsive rally into that, 2020 sort of high there. And sort of since then, it's sort of, you know, you can sort of say it's sort of gone largely sideways. It's a bit like, you know, a bit like the XJO in some regards. But the whole thing there is actually sort of, is sort of staying sort of nice and tight, this last correction there. So we've sort of had a few tests of the high there. Most recently, that sort of, off this last sort of test of the high there has, that sort of correction there has sort of stayed pretty flat there, hasn't had a really deep pullback. And that's, you know, potential. I mean, people talk about sort of cup and handle sort of set up there on the larger scale there, but just, we know that when we do sort of see those sort of tighter corrective patterns sort of under the old high there, that's pretty constructive. A lot of those sort of break in favour of the trend, which in this case is sort of upwards here. So, so I like the chart there. Just love the fact that we sort of washed out there at the end. So it looked like when it was sort of, you know, staying nice and tight there, that it looked like it broke lower. So a bit of a, you know, I guess we call it a spring there, or a bit of a fake out there. Basically, the market sort of, you know, trying to stop everyone out, and then bang, it's just had a really quick reversal there. So just love to sort of see those washout sort of fake out moves. And then you get a quick bam reversal there. It's a good sign there. So I'm pretty encouraged by that price action. That looks pretty good.
Well, that's a good basis for the spot gold chart. There are also gold mining companies that you've put into this week's report. You've spoken about Newcrest before being a little bit behind some of the other ones, but definitely out of the October lows, rallied quite strongly, had that pullback, which is sort of getting smaller and narrow into that point. I guess, is this candle here, this bottom one, is this of great significance to where it's sitting?
Yeah. So again, it's a little bit of that sort of fake out there, Chris. It's sort of got, I mean, really, that's had a pretty impulsive rally off the 2022 low there, and then it's sort of had a pullback there. That's been kind of more of a sort of sidewaysy, you know, sort of orientation as well. And that's a sort of, yeah, nice little, yeah, pennant flag sort of price action is tightening up. Looks like it, you know, broken out of that little pattern there, and then basically has reversed here sharply. It's I guess, having studied charts over 20 years there, sometimes when I see these sort of descending wedges or pennants and stuff there, if they do overshoot outside of the pattern, I find that when they come back in the pattern, they can go really hard. So it sounds strange he's saying this, but it's actually even more bullish if we get a fake out one way, because then that confirms the other way. And I read that actually in we study rectangles. You know, I remember Bulkowski was sort of saying in the notes on rectangles there, if we saw a breakout of a rectangle and then it reversed sharply, it didn't follow through, then it basically not only did it get target, it actually kept going through the other side all the time. And so I think that's actually even, that fake out there actually is even stronger. It's actually more of this shine here, the fact that it's broken out there. So from my observation, I've just seen a few of them break outside of these patterns, even some of the descending wedges as well. That the bigger patterns, when I see a break on the downside, it can come out the other side even stronger. So it does look pretty positive to me. And I mean, this little price action there, it's it's a sideways orientation. Not impulsive at all. It's corrective, keeps overlapping, whereas look at that rally went up there. The whole thing just kept sitting on top of the old highs there, and even less spacing a few of the times as well, and really impulsive. So we go up quick, go down, slow and overlapping, and then go up quick again. So that's how these things normally go there. So the volume looks pretty good as well. So can't see anything negative about that chart, Chris. So looks pretty good.
Well, there's also support in the sisters, and one of the sister companies is Resolute, which you've spoken about a few times. RSG, I'm going to highlight just here, October lows, even higher low during the October period. Sort of went for a bit of a rally, mild pullback, same thing that you're talking about, up fast, down slow, then up fast again, and then down slower, giving up more than half of that most recent rally there. But this consolidation you've talked about before, the coiling, compression, the tight closes, and the low volume. I guess I might have stolen all of your thunder on this chart, though.
Yeah, no, man, it is right. I mean, basically, while gold was sort of weakening off there and had that little flash down to the low there, RSG sort of held tight above that 50-week moving average there, so really didn't show much weakness at all through there, and the volume had dried right up as well. So we've seen price tightening up, volume tightening up here, showing relative strength there, and then we've had that little bit of a pop there last week there. So volumes come back in as well, and we're sort of kicked up out of that little tight action off that sort of key support zone as well. We know here that first leg of this rally is really, really strong, really, really impulsive, big volumes as well. So that's a really good sign for the longer term. And we, obviously, markets just don't move on one leg only. They often build there, and we get first leg a contraction, a second leg contraction. We can get a few different legs up here. So, exactly. So that's really, really encouraging here. That seeing those really impulsive moves on big volume there, that's the sort of signs that we'd love to see. Strong volume, because then we sort of know that when the market has a bit of a pause and correction, the next leg there can really go as well. So. Really like to look at this as well. Looks pretty good. This one here does move a bit, so probably suggest smaller position and sort of build into it, because obviously smaller stocks got the percentage moves quite larger for every sort of 0.5% or cent. So, but yeah, I like to look at this.
Well, if we move from gold into something that's we're out of favour and getting belted by the media, the share price, markets the last couple of months. We're into the healthcare space. So Sonic Healthcare, you've got the 0% here from the lows that we saw back in February 2020, the start of this year. Quickly gapped up, rallied, and hit the highs sort of April, which is the 100% part. So if that's the full range, what you've highlighted here is that in this pullback as an increased speed, it got back and it's gotten beyond 75% of the pullback, or like, where are we heading here? Is this the kind of thing where you say it's a bit like a magnet and it always draws it back to the old low?
Yeah, a little bit like that, but look at this one's probably come back a lot further than I thought. Actually, because this is probably one of the ones that held up the best while everything else was getting cutted in the sector, and then eventually got dragged down towards the end. But I guess if you look through that sort of setup there, we did see that once it sort of started to break down, every rally sort of stayed under the previous swing low. So then tried to bounce down the low, tried to bounce down and swing low. And then it's just tried to bounce here now. This is the first time I've actually broken above the last swing low. So, that's actually, so we've got a bit of a change of character there. We've also got this downward channel there, nice and tight, and we've basically broken out of that as well. Seen a little bit of volume down that low, and maybe a little exhaustive there, but you have two things there. Just the fact that we've now sort of broken above that sort of swing low is encouraging. and broken out of that channel is encouraging as well. So it might need to build a bit here, but it does show sort of a bit of a change in character for this sort of stock here, which I think is probably one of the maybe stronger healthcare sort of stocks as well. So some good signs there that maybe there's could be a change of character occurring here for the healthcare stocks. And we saw that CSL had that massive washout here the last few days as well, been massive. So big volume, big spike as well there. So those are, in the past there, they might have been at lows there all the time there, but they end up being definite pivot points in the market. So whether we get a small or a big rally from there, but there's a couple of big heavy days volume wise there, and that's a big level too. I mean, that we showed the weekly chart there around that 240, 245 there was sort of a big, that's the lows in the past. Had 3 or 4 touches in the last 3 or 4 years. So we're actually going to a slight new low again on the weekly. So that could be another potential sort of false break on the weekly as well. So it just looks pretty interesting there to me. CSL looks might have to do a little bit of building here, but does look like a good exhaustive sort of washout low here, which in the past we've seen at least sort of either a small bounce or a large bounce sort of follow.
Well, moving from CSL to consumer discretionary, always love looking at Domino's. I remember a client said to me when they were at $6.80, "Oh, how many more pizzas can this company sell?" Clearly, they've sold a lot more pizzas since then. But look, they've had a bit of a washout through to March this year from sort of the start of the year. And then they sort of trawled along the bottom, volatile from 42 to sort of 54. I'd note that you've sort of drawn the lows here and connected a few of them. It's made higher lows and then broken out of swing highs. What's the critical part here on the right-hand side? What are the key points to look at here?
Yeah, look, we've got a series of sort of high lows, and they've got a series of sort of new highs as well. So sort of got a bit of a base building there. We're sort of also went through a bit of a sideways orientation there. And that largest sort of sideways orientation there that occurred when the market was pretty weak as well. So really, again, the sort of stock has showed a bit of relative strength risk versus the market pulling back as well. So I sort of thought this looks pretty interesting to me. It's sort of, I thought when it was sort of maybe it was going to push on through and break above the high there, but it just didn't do that. Sort of stayed sort of in that range here. So definitely one to keep an eye on here. I'd love to see that David Ryan sort of nice tight congestion underneath the high, and then sort of push on. So it's definitely one to keep an eye on here. I think look, it's probably. This obviously, if the healthcare sector has been hit pretty hard there by that, obesity drug there, you think, maybe pizza should have been hit hard as well. But I guess there's also
maybe it's the opposite. Maybe they'll buy more pizza because they're on late.
Well, it's supposed to suppress your hunger. That's the theory there. So you're supposed to order less food there, which is what
not good for Domino's.
Yeah, Domino's and Walmart, things like that, so seeing people order and eat less food and stuff there. But I guess the thing about Domino's, and I think this is probably the same for Collins Foods as well, is that, if we are sort of, if you're at a higher cost environment there, obviously inflationary environment, then those sort of cheaper sort of takeaway options will become potentially a bit more attractive. And, the humble $5 pizza, could become a lot more popular if people are worried about sort of cost of living, things like that. So that's probably the upside there for those stocks there. So take away the obesity drug there, and we'd probably normally we'd all be going, we're doing it tough there. We might buy a few more $5 pizzas.
Right. Well, that's on the food front. You also got one more in here, Satire. So CTT, that's just an amazing chart. From a studying perspective, that's just quite something amazing. But we're more focused to what's on the right here. Why is it that this has caught your eye?
Yeah, it's actually similar to that Collins Food chart there. It actually sort of pulled back and and in a pretty tight manner, and it's on pretty light volume as well. We've seen there was so tight the last 4 or 5 weeks. It's sort of pulling back here, and prices sort of starting to tighten up here, and the volume is really sort of shrunk here. So it's sort of like pulling back here on lighter volume there. So again, sort of in a market which is pretty weak here, this is held on pretty tightly. So yeah, some encouraging signs here that the stock's sort of holding up pretty well. So yeah, this is sort of one to be patient on here. Just want to sort of see it maybe break a little bit B wave there. So to me, I think if it can kind of hold here and then break above $3 there, it'll be definitely worth, probably following here. You've got to be patient there with that one. I think it's I think it's pretty encouraging. Just if you remember that, I think it was 88 had that, Oil and 8 had that chart. They were sort of chopping sideways for a while. It's sort of they can stay in that chop for a bit longer than you think. So you just got to wait patiently for the right turn here. But yeah, you can see the price has tightened up here. There's been no volume there for the last 4 weeks, so I think that looks pretty encouraging.
Nice. Well, there's some good charts to take into the week ahead for us that you've dissected, looked at, and pull the best from them. And any words of wisdom to leave us with, or any gold cycle statistics or anything like that to share with us?
No, look, I guess we talked about, for those sort of those guys that are sort of trading and stuff there, sort of talked about, keeping a journal or, reviewing your trades and stuff there. So I've sort of started to review all my trades for the last 3 months. I think it's a good exercise there to do. Like a lot of people probably won't do it, Chris. That's I think the best traders there will definitely do a review. So I just suggest make a guarantee to yourself to go and do it. Go and review yourself there. We expect a guarantee, from our builders, from our tradespeople, from everyone we deal with, but we very rarely hold ourselves to the same guarantees that we want from everyone else. So make a guarantee to yourself, start reviewing your trades, go through and look at them in detail and one from you'll only get sort of good findings and good results from doing that work.
Would it be fair to say that when you review your trades, your readings and what you get from it is equal to, if not better than, one of the best trading books you've ever read? This is specific to you and your trading and how to advance it?
Yeah, look, it'll expose you. Maybe that's the reason a lot of people don't want to do it. It's you're exposing the truth and what you've done in your trading there. So it'll expose if you've sort of taken a B trade instead of the A trade. It'll expose if you had an A trade that had met every criteria and you're only scaled up half of what you should have done. It'll expose everything that you're doing, but it'll also add a lot of clarity to your trading there. So it'll be clear the things that you're doing wrong, things that you can improve on, and things that you can do better. And if you listen to that and follow it, then we can only get better.
Well, that's a really good insight for anyone who wants their own homework. They can leave comments below of the insights they've gathered from their own trading, and Gary will no doubt give us an update again next week as to anything that he's got from his. So comment below if you want to share your insights of what putting the mirror up against your own trades and what that shines back to you and what it exposes. And to that point, we'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
He's mentioned the Launchpad, looking at the gold shares and seeing so many of them in the top list this week. That was on Friday. That playlist is on the right. The insights into the strategies, the springs, the reversals, the patterns, that's on the right as well. And on the left is Gary's X or Twitter handle if you want to follow him there.